we begin with the headline that moved the markets. Here it is, word for word. Quote, Trump says China may or may not keep the trade deal, end quote. That sank stocks into the close. Check out the move on the Nasdaq, for instance. It was up big for most of the day, then a sharp slide in the final moments of trade. Ditto for the S&P 500. So, Guy Adami, is China back in play here? Is this the next big risk factor for the markets?
Yes, and before I get into great detail, have to wish Tim Seymour, as he power pitches today, a very happy birthday. Just wanted to get that out there.
Tim Seymour.
What was the question?
Thank you, sir.
China.
Very
China.
kind, very
Right.
kind. Thank you.
Yeah. Yeah, I absolutely think this is a big deal. And we started talking about it last week, not in terms of, their trade deal or where they're going to keep their end of the bargain, but in terms of some of the rhetoric coming out of the Trump administration. Right or wrong, I'm not commenting, whether it's correct or incorrect. What I'm commenting is the rhetoric seems to be getting louder, and in no way, shape, or form is that market bullish, especially given the fact that the market's rallied back some, 32% now to the levels that we find ourselves at. So I think people are not paying enough attention to it. I think today they finally started.
There were a lot of comments that came out of the White House attributed to the president. He also said that he will be able to report on whether China is fulfilling its obligations under phase one of the trade deal in about a week or two. And at the same time, he says he doesn't believe the death toll numbers coming out of China. Tim Seymour, there are a lot of cross currents here, but in terms of tensions with China, they seem to be ramping.
We had this conversation last night, and it was particularly appropriate even for today, which is that thinking about trade policy in a post-COVID or in a COVID-19 environment, if you think anything has changed with the administration in terms of how they're approaching China on trade, nothing's changed. And I think that's something that the market is probably taken a little off guard on. And maybe they shouldn't be. I mean, the agenda ultimately about controlling and pushing back on the digital creep, how should we say, that we think is happening in China. But the bottom line here is that the market, which is very much sentiment-based right now, and it's much how fiscal policy and monetary policy have supported markets here, has been as much about sentiment. This is not something that the market was really factoring in on a day when we got a horrendous ADP number. And on Friday, we're going to be reminded that this economy is not going to recover overnight. So if we had structural and systemic dynamics with trade before all this even started, and we're hearing about it again, the market, which has been struggling at 28.50 to 29, is certainly not going to take off from here.
We looked pretty okay on the back of those stupendously terrible ADP numbers. I mean, we had sort of this risk-on looking market, Steve Grasso, up until about 3:30. We had information technology on the S&P 500 as a sector positive. It managed to end positive for the year. We had the Nasdaq, it gave up about 1% of its gains on the back of all this. We had actual selling in the TLT, the bond market, finally. So it looked like there was some sort of relationship between stocks and bonds that made sense finally.
Yeah, I think that the market just had one thing to hold on to going into the close, and that was the headlines out of with Trump on the trade war or potentially getting back on the forefront. I think this market, 99% of this market, is going to trade off of vaccine, off of therapies. I wouldn't make too much over the last half hour to play in the marketplace. I think what you really have to concentrate on, growth, technology companies. I get it, though. All these names that have taken us to the finish line or halfway up from the lows are all the technology plays. So what comes with technology? Your dependence on China. Qualcomm derives 63% of their revenues from China. Micron, about 50 to 60% of their revenues from China. So I get the concern. Let's worry about the economy restarting right now. And I think tomorrow, if we get a barrage of positive headlines and we're going in the right direction with some states restarting their economy, some states getting a handle on it, and the death rates and the fatality rates that are sort of stabilizing, I think we're not going to think about China. It didn't take that much out of the market today. Mm-hmm. I don't foresee it being a huge play in the marketplace. You don't really see that much happening after hours on my screen, so I wouldn't worry about it.
Hey, what'd you make of the action?
You know, Mel, I think the honest to God truth is when you look at the markets over the last 2 or 3 trading sessions, it's come down to the final either 2 hours, half hour, 45 minutes, whatever it might be, off of one specific news story that people just seem to grasp onto. So I think what we saw today, and I wish the president hadn't have gone where he went today, because I think we are dealing with, to Steve's point, quite honestly, we're dealing with enough things right now as it is. And I don't know necessarily that this would be the timing where I'd want to bring up the trade war and whether or not the Chinese are going to adhere to it or not. And I think the reality is there are so many better places for us to be focused on right now. But that being said, he did bring it up. And when you look at the market reaction, it really wasn't. I realize we finished down 200 points, but the Dow was struggling all day, and we pulled back in the NASDAQ. But I still look at it and say, you know what, that kind of a reaction, it wasn't we didn't get that kind of move where we're down suddenly 500 points and everybody's freaked out. We did get a push to the downside. We did pull back, but not any different than the last couple of days. So from that perspective, it really didn't have as big of a negative effect as we might really first would have thought, given what was really said by the president.
I think that's a fair point. I mean, if this comment was meant as some sort of a trial balloon to the notion that the U.S. may, in fact, cancel something that had been negotiated in good faith with China, we took it pretty well, Guy. At the same time, if we back up and remember, I mean, our muscle memory when it comes to China trade, during the worst of it, you think of December 2018, that was not a fun time.
Yeah, everybody's made extraordinarily valid points. The market did take it well. I'm not suggesting it didn't. What I'm saying is I think we're underestimating how this rhetoric can go. And it's, the trade portion of this is just one aspect that now President Trump has brought forth. But this started last week when the administration started floating out the Chinese are going to somehow pay for the coronavirus and they're going to be reparations and those types of words being used. That, to me, is a little bit frightening. Now, my sense is the Chinese aren't going to take that well to it. And my further sense is President Trump's probably not going to back off on this rhetoric. And I don't see how. Listen, I'm not suggesting it's devastating for the market, but it's certainly not bullish for the market, in my opinion.
I mean, when you add the other ingredients, the potpourri is not pleasant, Tim.
No, it's not. And so look at risk factors today that we're measuring, I think, this potpourri. I know our viewers don't really probably always focus on things like dollar yen, but that's a measure of risk. And we're essentially getting near 4-year lows again on euro yen, which tells you the European Union's currency is depreciating. There's certainly been a lot of talk about how impacted that economy has been. The dollar has been strengthening. Treasury yields are a little bit wider today. If anything, that's probably should have been a sign for equity markets that was bullish. But for the most part, we are seeing different parts of the market, and it's not terribly bullish that the market's been focused only on these mega cap tech companies, and that actually the Nasdaq's outperformed the S&P by almost 1,500 basis points this year. That to me is not bullish. The breadth that we had seen at parts of this market before COVID-19 that was encouraging coming out of the trade war with the Fed as your friend are not things we're really seeing here. So risk factors responding to that potpourri.